Good evening, my dear friends. In order to understand the turmoil in Wall Street today regarding two competing groups of stock traders and the rising stocks of a video game company called Gamestop, we must first understand the nature of corporate stocks and corporations. In layman's term, shares of stocks is the capital investment of the corporation. The original concept is that a corporation is divided into shares of stocks which will be distributed to its investors, called the stockholders, who will be issued stock certificates. So when you invest in a corporation, you will buy shares of stocks from that corporation. The true value of the shares of stock in a corporation is in correlation to the assets of that corporation. So to illustrate, just for example, if Philm Corporation has a total net asset of $100,000, net asset meaning after deducting liabilities, and the articles of incorporation divide Philm to 100 shares, then $100,000 asset divided by 100 shares is equal to $1,000 value per share. So the true value of Philm Corporation shares is $100 per share. But then, when some of these shares of stocks are sold by the stockholders or by Philm Corporation to other investors, these stocks will be traded by stock trading firms in the stock market in Wall Street. And this is where trouble begins because stock traders through the years came up with many formula on how to determine the value of corporate shares of corporations that they are trading. Let us just skip the technicality of defining par value, face value, or market value. The basic concept is that the stocks are traded at value different from its true value that correlates with corporate assets. So if you look at a corporation, it is selling its merchandise or services to its customers while its shares of stocks are also traded in the stock market. So the value of the corporate shares and the corporate assets, which are supposed to be correlated, are actually going different ways. So if Philm stock's true value of $1,000 per share are traded and sold for $5,000, then this could create a bubble that could burst and harm a lot of investors when the stock plummets down to its true value. On the other hand, stock traders could also hype down the value of corporate stocks below its true value so they can buy and sell it and make huge profits. This is what happened back when pandemic just started. Last March, a group of speculative stock trader firms, also referred to as the hedge fund group, through its leader Bill Ackman, tried to bring down the market value of the corporate stocks of Hilton, TMC, and other big companies by disseminating very bad forecasts for their businesses. The hedge fund group is a very influential group of stock trading firms, and they have done this many times before. They would speculate a downfall of certain companies, and when stockholders of those companies sells in panic and potential investors shy away from those companies, causing an artificial drop in stock value, they would take advantage of the situation and buy the stocks at a very low value, and later when it settles back to its true value, they will sell those stocks and they will make tremendous amounts of profit. So, the past few weeks, the hedge group are starting to do it again, this time targeting a video company called Gamestop, forecasting that just like Blockbuster and Redbox and other non-online businesses, GameStop would go down. However, this time another group of smaller stock trading firms referred to as Reddit, because they always meet and chat through Reddit, which is an online chat room or website, have decided to rescue GameStop from the hedge fund group manipulation. So Reddit started hyping up GameStop businesses and massively buying their shares of stocks. The internet traders and investors who saw this also rallied to the rescue and massively bought GameStop shares. As a result, GameStop shares zoomed up super high, and many Reddit firms and other investors gained by the multi-millions. On the other hand, hedge fund firms incurred heavy losses by the multi-millions because now They were forced to buy the much higher prices of GameStop shares in order to maintain their undertaking to their client investors under an assumption that the stock prices will fall down. So the hedge fund group, through their big ally, stock trading firm Robinson, attempted to prohibit Reddit traders and other investors connected with Robinhood from further trading GameStop shares. So as it looks now, that the hedge fund traders are trying to prevent other traders from doing similar thing that they have been doing in hyping up or hyping down the value of corporate shares. So it's okay when they do that, but it's not okay when others are doing that. Just like what the Democrats are doing in this country. At this point, lawsuits have been filed between the competing groups of stock traders. This kind of stock manipulations happened time and again in the past. Obama and Biden didn't do anything to regulate Wall Street, and the media never blamed them for that. But when Trump was president, the media have always condemned Trump for not regulating Wall Street. It seems like Trump, being a businessman himself, is not in favor of government interfering on how businesses are played. He seems to think that he doesn't want to allow, or he wants to allow the firms to outsmart each other. So the Democrats and the media condemn Trump time and again for not regulating Wall Street. But now, when this happens to Joe Biden, who is now the president, the media only asked Joe Biden once on what he intends to do. And Joe Biden didn't seem to understand what's going on. He just issued a statement through his press secretary that they are going, quote unquote, going to monitor the situation. That's the only thing he can say about the topic. There were no follow-up questions from the media, and they even seemed to protect Biden from further questions, diverting the attention of the public to COVID and praising Biden for the vaccines. So why is Biden hesitant to do what they're saying that Trump should have done, which is regulate Wall Street? Well, the answer is that not only that Biden don't understand the stock market well enough, he is also tied up by debt of gratitude. Bill Ackman and the traders at hedge funds have inflicted so much damage on Trump's reputation during the campaign when they made their overstated false forecast of a gloomy economy and the supposed downfall of many big American firms during the start of the pandemic, thus damaging Trump's reputation and therefore helping Biden's effort to undermine Trump's economic achievement. And in addition to that, it is also a fact that many of hedge fund investors are big contributors to the Biden campaign. And so, that's where we are now. A turmoil in Wall Street and a media-installed president who doesn't know what to do.